Okay, folks, welcome back. Welcome to FX Beethoven First Argo Decoded. My name is JD. Today, guys, I wanna teach you SMT divergence and how to use it in your trading. By the end of this video, you'll have proper understanding of how to use this technique of trading, and it will sharpen you guys. And I'm sure it will help you in your trading. So follow carefully as I show you guys how to use it when you are trading. So here we have the dollar index and you have Euro USD. You can also use GBP USD, maybe in the pair you think it's related to the dollar index. So to the dollar index or DXY is the leading currency. So if the dollar index is going down, so other pair are supposed, other currencies are supposed to go up. There is a difference between a currency and a pair. So a pair is a set of two currencies. So if the dollar index is going down, other currencies are supposed to go higher. If the index is going up, other currencies are supposed to go down. So now, here we are going to compare the index against a pair called the Euro USD. So what do you expect when you are going to trade the dollar index? If dollar index makes a higher high, like this, a higher high, so Euro USD is supposed to make a lower low. So if the index makes a higher high, the index is supposed to make a lower low, like this, as you can see. Now we are not going to use common structure. We are going to use candlestick manipulation to understand this concept, because you will need it when you are trading, guys. You will always see it in your chart, and I will give you an example using a chart so that you fully understand the concept. So now here we have the dollar index. Price has traded into our imbalance here. Price has traded into this imbalance. So this is your imbalance. Price has traded into your imbalance right here on this area, performing manipulation on these candles, in these two candles, as you can see, in these two candles. So on Euro USD, we are supposed to see the same. We are supposed to see price trading down into this imbalance, and we see a perfect rejection manipulating these candles. So this is what we are supposed to see, so that we say it's okay, we're gonna be bullish. We're gonna be bullish if we confirm a change in the state of delivery or perfect break on structure on market maker structure. So now, as soon as you see this, you open your chart, you didn't see Euro USD rejecting. The candle is still here. The candle is still here. So there is a divergence based on manipulation. There is a divergence hidden right here. If you change time frame, there will be some kind of divergence. So remember, once we see this, this is a perfect manipulation. We expect another candle that will start around here to trade higher, for example, and then go down. They go down, testing this anti manipulation that was formed here. So we are going to see a bearish candle forming on the dollar index. We are going to see a bearish candle forming on the dollar index. Something like this. Bearish candle forming around here. going down. So the same here, you have to immediately expect to see a bullish candle. It's going to be a bearish candle. Of course, it must be a red color. So here we're going to see a bullish candle going higher immediately from this area, because the dollar index has already confirmed a move to the downside. So the same here, you immediately expect a move to the upside. Since this is case number 1, we have got a rejection, but here there is no rejection. Case number 2, or scenario number 2, you have imbalance here. You have your imbalance that was left here. Then this candle did not touch it. However, on the dollar index, price has already traded within this imbalance. Everything I say, the conclusion is always made after a candlestick has closed. So if this candle is still running, you have no permission to confirm the direction. Now here on Euro USD, price did not trade into this imbalance, but on dollar index, price has traded within this imbalance, and you have confirmed the direction. So once you see this, do not expect that Euro USD is going to trade here. Instead, as this candle is starting going down here, another candle is also going to do what? Is also going to go higher. Is also going to go higher. You are going to see a bullish candle forming around here. You are going to see a bullish candle forming around here. As long as this one has been confirmed, but here price did not trade into this imbalance. So this is it. You expect price to go higher. So if this happens, this is a smart money divergence based on what? On the candlesticks manipulation, not the structure. I'm just talking about candlesticks. I'm not talking about structure like this. In terms of structure, if we see a structure like this, and then here price is also supposed to do what? To go down like this. Remember I told you, once the dollar index makes a higher high, Euro USD make lower low. So we are supposed to see something like this here if we change it to a lower time frame structure. But if we see something like this, there is a divergence. Dollar index is making a higher high, but Euro USD is not making a lower low. So that is what we call divergence. So you can spot that by using candlestick. Or the same here, the index is making a higher high, but this one is still down here. It's not moving. It's still here. We are not seeing a change. You see that? We still have a leg. I'm talking about this last test leg you have here. You see, this one is around here. This one is still down here. So there's something. So we expect that explosion is going to happen on Euro USD following what? Following the dollar index. So I hope you understand this concept, and I hope you can start using it in your trading. So let's go to the chart and I show you example. Okay guys, now here on the chart you can see US dollar index in a weekly time frame on this date, 17th of July 2023. So here, remember, if the index is going down, Euro USD must go higher. If the index is going higher, Euro USD must go down. So anything against that results in a divergence, especially on important key level. Like here, we have done draw on liquidity on this area, as you can see. Then if you see how the move started on the top, right here, we start the move with a clear manipulation to the downside, so we need another manipulation to go higher, but it didn't happen. It didn't happen, as you can see on this candle on the DXY, So looks like you have something like this, like a W pattern if you change to lower time frame. Well, here we have what? Well, we have an M pattern with what? With a strong leg to the outside, as you can see here. Sorry guys, this is my tool. Okay, right here. So here looks like we have something like this. I'm talking about this manipulation. You can see how this candle traded higher, but here it didn't trade lower. So this is what we call divergence. So if they're not doing the same, right? You can see. So manipulation is forming here, but here manipulation is not being formed. This means there's too much pressure being put here. So price is gonna go higher on the DXY, and you're gonna see price dropping on the Euro USD. So here we are supposed to see on the DXY, we are supposed to see something like this. I'm just talking in terms of structure. So we have a W pattern. We are supposed to see something like this: higher high, lower low here, or lower low, higher high. But it didn't happen. So there is anomaly, or there's something going on here that you have to pay attention. So every side or every pair, this pair can give you a signal of what dollar index is gonna do, or what smart money is doing on this pair or on this dollar index. So this is just a simple example, and I want you to use this when you are trading, for example, on a daily. When you are trading the candles, guys, focus on using it on 4-hour time frame. If you see this happening, like those drawings I have shown you, so make sure you understand that. So what I mean, I don't have to draw again. So assume that you are trading a daily candle, and you have your pattern forming. Assume that you are going to trade a reversal. Assume that it's gonna be a reversal. Assume it is gonna be a bullish candle, and this was a bearish candle. Now assume that you have hit a point of interest right here. There's a point of interest around here, which can be, for example, already low, for example. Then right here, price trading on this area, for example, dollar index is doing something like this. Dollar index is manipulating to go higher, but when you check on Euro USD, for example, you realize that this one did not happen. For example, this is 4-hour candles. This one did not happen. You see on 4 hour it's like this. Didn't happen. So expect to buy. Expect to sell. If this is dollar index, so you are going to see something like this. It will be inverted like this. On Euro USD, you see something like this, and price did not grab this liquidity, so expect to sell. That's the scenario number one. So, or if you check and you see, assume that this one is Euro USD. and it has performed manipulation, but the dollar index did not perform manipulation to the downside. So Euro USD is pushing higher, the XY did not push lower. So expect to sell, to buy. If you are bullish on Euro USD, expect to buy. So this is what I'm trying to show you guys here. So another scenario is here. You can see here the dollar index did not close above. It just manipulated. As you can see, perfect manipulation to the downside. But if you check, if you check here on Euro USD, you can see that the candle has closed below this candle. This bullish candle, meaning this bearish candle you see here, has closed below the low of this candle. But here, this candle did not close above. So if there was a harmony between these two structure, we were supposed to see this candle also crossing above this one, crossing bullish. This one closed bearish, this one was supposed to close the bullish on this area. But you see this closed bearish and manipulated. So if, remember, once we have manipulation on one side, we expect another manipulation against it, so that we change direction. So what I mean is this. I'm trying to find drawings. Where is my tool, guys? Oh shit. Or let me use arrows. So here we have a manipulation to the downside. Draw on liquidity, which is last area of liquidity is around here. Now, once we hit that, we expect another candle to go down and manipulate this low before we go higher. So this is what we see here. We have a manipulation to the outside, we have another manipulation to the downside, so that we sell this candle on the dollar index. So we are supposed to see the same here before we do it, before we buy. But if you were to expect that or to wait for that, there would be no opportunity for you. That's why I posted that trade on my Telegram, and I told people why I decided to immediately buy this candle, because the signal was coming from here. This is another hidden divergence, because this candle is supposed to close above this low, because this one closed below this high. I don't know if you understand the concept. This one is supposed to close, this one has closed below this high. So this one also was supposed to close above this low, but it didn't happen. That is another hidden divergence in terms of manipulation, guys. That is another hidden divergence in terms of what? In terms of manipulation. Hope you understand that. Here is another example of another scenario on which date? 30th of December. Same here, as you can see, another good example. Here, this candle did not trade below here, inside this imbalance. This candle, this one, did not trade below there. But here on Euro USD, you can see this candle took previous week high and traded within imbalance. As you can see here, price did not trade within this imbalance, and it didn't take the low of this candle. but here trade within this balance and it took the high. So this is another form of divergence. I'm just using weekly time frame, just because I was able to find quick examples here. But if you are trading on a daily, or if you are intraday trader, you will be dealing with this using 4-hour time frame. And once you see that at your key time, like New York or London session, that's the key. You are ready, you position yourself to buy the next candle that's going to form. For example, if this is a 4-hour candle that is forming, and this one is going to be your beautiful setup, because you have seen the divergence here. Hope you get the idea. So it would be a bad idea to wait for price to trade below this area to manipulate this low before we go higher, because here manipulation has already formed. So we have what? We have divergence in terms of what? In terms of candlestick closure. Hope you can see that this one closed below the low, but here price did not close above the high. So the DXY is giving you a signal that price is gonna go down. That's, guys, I will be starting a series about liquidity this coming week. So I will find good examples and I will show you how to use this concept when it comes to trading. So that's it. This is what I want to show you guys today. Until next time, guys, good luck and good trading, and don't forget to subscribe. Don't forget to follow us on our Telegram channel. The link is in our video description. So please go there and check the link, follow us, because I'll be posting more about this. So I'm sure you will be learning something, honestly. So thank you, guys. Have a good time. Have a good trading week.